In this video, I'm going to show you how to become an investor today, coming right up. Hi, this is John Leith. This is the first time you come across me. My channel is all about creating multiple streams of income, starting businesses and growing businesses. If you don't want to miss out on all the new content, click the subscribe button, turn on bell notifications so you don't miss out on all the new content. The first thing you want to do when it comes to creating and becoming an investor is to make sure that you manage the risk. A lot of people get into business, but they don't manage the risk. Even though you want to learn how to make a lot of money, you also need to know what loses money. And so some of the risks that happen, like you want to look at, is the market ready for this? What is the life cycle? Everything that you invest in has a life cycle. For example, if you were going to invest in a company that sold VHS tapes now, it probably wouldn't do well. But if you invest in some kind of streaming service, a lot of people are streaming right now. So what is the current trend? Like, what's the risk? You got to manage the risk. It's kind of like when people invest in bonds and stocks and shares. Like, okay, what's the trend? Is the trend going up? Is the trend going down? Is it flat? Is it going up, down, or sideways? So a lot of people, when they go and trade in stock, they'll put all their money into stock. And what happens? The market goes, and you lost your money. All right, but imagine if you just, every trade you go into, you're only risking 1% of your entire pot. So you got to learn to manage the risk, when to get in, when to get out. And as an investor, you need to be educated to know whether the market's going to move, whether it's a stock, whether it's a business, whether it's a life cycle of something, whether it's a good investment to get in long-term, short-term, medium-term. Like, you got to have the knowledge to do that. If you look at Warren Buffett, the reason why he's a billionaire, he spends a lot of time researching. So here's the thing with investing is that you've got to spend most of the time researching and spend quick time executing. The second thing you need to understand is you need to understand the end goal. So when you're an investor, why are you investing? Well, there's a few reasons why people invest. Number one, they're investing for the exit. So if you look at someone like Peter Thiel, who, he invested a lot of money into Facebook and he made a lot of money back from that because he could see like the exit going in as a VC. He would say, okay, well, this company's got this much growth, it's going to get to here, and now I'm going to exit here. So as an investor, you need to know what your exit is. So what is your exit? Do you want to grow the company? Do you want to exit fast? Do you want to sell off short? Do you want to sell when it's high? Are you waiting for the share price? I'm telling you, for a lot of you, especially if you're in technology, one of the best companies that people say, John, what company should I invest in? I can't tell you what company to invest in, but I can tell you that the sectors like technology, if you look at, in fact, do me a favor, after this, or when you got time, if you go back to Google and you type in Amazon share price, or Netflix share price, or Apple share price. If you go back 10 years from now, if you look at the curve, a lot of technology companies are growing because it's got scale. So if you have a chance to be involved in a technology company and you're not putting all your money into there, you're just putting some money and you can afford to lose that money. I would say if you become an investor, make sure you can afford to lose that money, because a lot of people put all their eggs in one basket and you don't want to do that. So make sure like you understand like what's the end game, like where do you see the companies going to. So like if I'm investing in a startup, I want to say, okay, what's your end vision? Like what's your goal? What are you looking to achieve? And I want to see if my vision aligns with that, because as an investor, you can be short-term, medium-term, or long-term. And the people that hold out long-term are the ones that normally win, because they ride out the wave, because share price go up, down, up, down, up, down, and then eventually you see the trend, right? So think about what is the end game for you. Okay, number three, choose a trading platform or an opportunity. So a lot of people say to me, well, John, like, I want to become an investor, but how do I invest? Well, first of all, you want to look at what opportunities. So there are lots of places you can go to see what new startup opportunities are coming. There's lots of angel meets where you see people pitching, a little bit like a show called Dragon's Den, where you see people pitching their ideas. So if you've got some money, you can then invest in that company. And so this is great for people who, they don't want to start their own business. They just got money and they want the money to grow for them. Because honestly, if you've got the money in the bank right now, it's probably not giving you the best interest. Am I right? Yes or no? Type in yes if you agree with that. So the whole point of this is to make sure that you are investing in an opportunity that you resonate with, that you can see happening. So that's why I like to analyze trends. If you go to Google, and there's actually a piece of software you can download that analyzes the Google trend. If you type in Google Trends, you'll see the trends going up and down, right? You'll see what's in, what's out. For example, like if there's any like health products or anything that does weight loss, when's the busiest times? Right, the beginning of the year or at summer. So you see the peaks do this. right? So timing is everything. If you get into the market wrong, it could cost you a lot of money. If you get out of the market late, it could cost you a lot of money as well. So a lot of it's timing, and a lot of it is knowing what opportunities are available. And by the way, if any of you are looking for opportunities, just let me know, comment below and say, hey John, I'm looking for some opportunities. Next time what comes up, I'll actually let you know. Maybe if it comes up, I'll make a post about it on YouTube to tell my community how to do this as well. So make sure that you're focusing on those steps, and I promise you, you'll be able to sniff out opportunities that other people can't see. And that's what they say, that success is when preparation meets the opportunity. Meaning you want to be ready for when that opportunity comes. You want to be ready for when no one else can see the opportunity. I'll give you an example. So a friend of mine, he used to work for these cars, and he puts all these like little bumpers and things on the cars. And one day he gets a call and he said, hey, I've got this really cool idea. We want to put these sensors in the back of the cars, and then it makes a beeping noise when the car gets close to a wall or next to the car. And he said, that sounds so ridiculous, it's stupid. Puts the phone down. And of course, those are now what we see on cars now, which are these parking sensors. Imagine if you'd have invested in that company. So you got to have the forefront to be able to see what's coming in the future, and then what's the trend, and you'll see it happen. There's lots of technology and software that will tell you what trends happening, what people are going into, and the best thing to do is look at different countries. So different countries accelerate their technologies faster and opportunities than the other countries. So if you're, again, well connected around the world, you can actually get that sniff. For example, one of the things that I do, I invest a lot into opportunity of marketing, right? So you probably see a lot of my videos on YouTube, Facebook, Instagram. So for example, like in the UK, it's really expensive to advertise versus somewhere like Dubai or Malaysia or Singapore, where it's a lot cheaper, or Germany, which is a lot cheaper, right? US is quite expensive right now. So now that I've got the forefront of how to see that, I execute and then I arbitrage that. So that's one of the things that you can do. The fourth thing you can do to become an investor is to put a deposit or an offer in for something. Now, just like I taught, if you've watched any of my videos on the property and real estate stuff about making offers, you can do the same with businesses. There's nothing stopping you from making an offer for somebody's company, but to know that, you need to know what revenue are they making, what profit is coming from that, or if they don't make a profit, there's also companies that don't make any money, but they still have a high valuation. If you look at something like Uber, they lost money for many years. Same with Amazon, they lost a lot of money for many years until they start making it back again. So this is what we call the J curve. In the J, it goes down, and then there's a part where they're not profitable, and suddenly it becomes profitable. So if you can see a company like that, and you can see, and you catch them right on the edge of the J curve, you can say, hey, by the way, I'd love to make an offer for your property, because you know that at that point they're gonna boom. They don't know, they spent probably 5 or 10 years building it, and they're not seeing that much return, and you come in at the right time. It's kind of like a story, isn't it? 3 feet from gold. Like, guy keeps digging for gold, and what happens? After many years, it gives up. He sells it to somebody else, and then they dig for the day, and bang, they hit gold. So your goal is, that's why you need to get educated. So when you can see the opportunities before anybody else, you can see right before they peak on that J curve, you're in for the money. That's what we call in the money. Okay, the fifth way to become an investor, again, you're gonna love this one, because this one's really simple to do. And before I go into that, if you've loved this, by the way, hit the like button, give me a like, and also hit the subscribe button, turn on bell notifications. The reason why I should hit the like button is because it tells YouTube you like my videos, and they'll show you more videos. All right, so the last one is to watch and adjust. Watch and adjust. A lot of people do this in stock trading. They'll watch the market and they'll see the trends. So each market will have a ceiling and it'll have a floor, and sometimes it'll bounce between the ceiling and the floor. When it breaks either the ceiling or the floor, you know it could be going to another trend. Again, don't do this if you've never done this before. Get educated, and there are lots of great people out there that teach a lot of these strategies, but this is something you want to be looking out for. Like, you want to watch the market and adjust. Like real estate, in 2008, that's when I bought a lot of my properties. I watched the market. The market went into subprime mortgage, it kind of went down, and went to the recession, but I was watching what was happening. Before that, like 2005, 2004, I was watching the market. Property market was going, like literally, if you wanted to buy a house, you'd have to put a sealed bid into a house to say, okay, how much you want to pay for this? And they'll say, okay, I want to pay this much for it. But guess what? Now, in 2008, I saw a lot of properties, and 2 years before that, I was seeing a property going on the market and selling in a day. And then I was watching the market, I watched a property go on the market, and then the price gets reduced, and it gets reduced, it gets bought, it falls through. So I started watching the market, and that's when I knew, bang, it's going through that J curve. So when everyone's buying, I'm selling. When everyone's selling, I'm buying. right? And again, don't worry if you don't have the money to buy houses. Lots of ways to use the strategy of OPM, which is called other people's money. So that's where you can find a lot of investors to use their money and partner together to buy properties. So my question for you is, which of these 5 strategies as an investor do you want to use? Right? Leave a comment below and let me know which one of these you want to use. And also, if you've got any questions whatsoever, leave a comment below as well with a question, and I'll personally come in and answer that question. Make sure you hit the like button as well. I would really appreciate that. And I'll link some videos up at the subscribe button up here as well. And this is John Lee, the author of Business Hack. Bye for now.